What separates a good real estate investor from a bad one? All successful real estate investors follow a few simple rules. And if you're not making money on your deals, I guarantee you are breaking one of these 4 rules. My name is Sam and I have a $40 million rental portfolio that I bought without using any of my own money. And I also own a house buying company that's gonna flip over 300 houses this year. Through all those experiences, I've got a taste of a lot of good deals and some bad deals as well. I've been able to develop a cardinal set of rules that has yet to fail me. I hope by sharing them with you, you'll be able to experience a similar level of success. It seems like the minute that you break away from one of these rules, things can go south very, very quickly. I remember earlier this year, we bought a $2 million house that we didn't even really do any work to. It definitely did not meet these cardinal rules because we didn't buy it at a discount and didn't do a ton to it. Our buy box is that $200,000 to $300,000 price in St. Louis for the most part, but we went away from that on this deal. Now we just got it closed and we made a little bit of money, but it was definitely a stressful time and not something that we should have gone through because it was way outside the buy box and we didn't follow our rules. First cardinal rule and the golden rule of real estate investing is buying distressed properties at deep discounts. You need to be buying at least 20 to 30% below market value minus the repairs that you're going to do on the property. Having that much meat built in allows you to screw up several times and still make money or at least break even. Things don't always go smoothly, so if you're buying at a discount and being conservative, you leave a lot of margin room for error. And also, the market's not gonna crash anytime soon in my opinion, but if it does shift, this allows you to have some wiggle room if the property goes down in value a little bit, but you're buying well below that, you still should be in a safe position. From 2008 to 2011, the average house price dipped 25% over those 2 or 3 years. And that was the biggest dip ever. So if you're buying at 20 to 30% below minus repairs now, even the worst crash in history wouldn't put you underwater. You would still have at least some equity in the property. While that's not gonna happen, you'll at least have a decent amount of equity if it does dip a little bit. The second cardinal rule that all successful real estate investors use is having multiple exit strategies. You want to have more than one way to get out of a deal in case things go south or change quickly, because guess what? Spoiler alert, not all deals are the same and not all deals are going to be smooth. For example, if you're doing a fix and flip and that's your only exit strategy and the market does shift, you could lose money or break even. However, if your other option is to wholesale the property or to keep it as a rental, it allows you to do multiple things, whatever is best for that specific deal, whatever puts the most money in your pocket, whatever the market does, you're able to shift if you have multiple exit strategies and have more than one way to get out of a deal. The third cardinal rule is managing your property effectively, managing it properly after you get it rented. A lot of people think the work is over as soon as you get the property rented, but honestly, it's just getting started. The most expensive thing about owning rental properties is when tenants move out, because there's a period of time where you're not collecting rent and you still have expenses. The goal is to minimize that as much as possible, and you have control over that by managing the property properly, getting good tenants in place, and being quick to answer any question or take care of any issue that the property has. It will most likely keep the tenant there longer, and you're also taking care of your property, so there's less deferred maintenance, so it's worth more. Now, if you're not a good property manager or don't want to be because your personality type or you don't have the time, you can always hire this part out. Just make sure after you get a tenant in place, you're taking care of the property. That's what all successful landlords do, and that's what you want to do. The fourth and probably most important cardinal rule you must follow if you want to be successful is to connect with your local community. Whatever town you're in, they're gonna have a local real estate investing community, whether it be in person at your local meetups or online on your local real estate investing Facebook groups. You must connect with local real estate investors. You're going to want to find people that are going to buy your houses. You're going to want to find people to work on your houses. You're going to need to talk to banks and lenders, and everybody meets in these local communities. The real estate investing industry is not really that big. So you need to connect with it as much as you can, get to know as many people as you can. You never know what the next relationship might do for your life and for your career. You just might meet somebody that's going to sell you a house that will start the trajectory towards financial freedom. Or you just might meet somebody that you're going to buy a deal from or sell a deal to. But you're not going to meet these people if you're not out connecting and being intentional about it. And as I said, this is not a very big industry in each local town, so you must protect your reputation. Always do the right thing. The more positive connections you make and cultivate and do the right thing in every interaction, the more deals are going to be brought your way because your reputation is going to be strong. So go out and meet people online and virtually. Your Rolodex will be immediately increased, and then eventually your checkbook will as well. By following these 4 cardinal rules, you're ensuring that you have a much higher likelihood of being successful when you start investing in real estate. If you want some more detailed videos and some more examples of how you can be successful, make sure to subscribe to this channel and hit that like button.